Welcome to Illuminati Silver. We tell you the truth about silver. Today is Wednesday the 19th of June 2019 and it's Fed Day. Let's examine it. Today has been much heralded as one of the most important days of 2019. The reason being is that after quite a significant period of quantitative tightening, the Federal Reserve may actually alter course today and reduce interest rates and embark on a program of quantitative easing once again. Since its Fed funds rate rise in December last year, the Fed has been somewhat prepared to let it be known that its quantitative tightening would stop from then. The market reaction to that December 0.25% rise was not good, and the Fed was much criticised for the move. In fact, President Trump even announced that he thought it was a deep state move to damage his presidency. Forecasts from multiple agencies, banks, and economic think tanks have all, without exception, highlighted lower global economic growth for 2019, with some countries moving into recession. This, it was claimed, would be further exacerbated by what is known as Trump's tariffs, a tool by which he believes forces countries to the negotiation table and to do a deal, though so far, with one or two exceptions, it has led to retaliation, and the world is gripped in a situation of economic uncertainty, especially in relation to China. It is hoped at least that the G20 meeting later this month will provide some light, if not resolution, to the China-US tariff war. Now, these forecasts of lower growth hit home to the United States by the non-farm payroll report announced on June the 7th. We've produced a video on this and listed it in the description below, which showed that only 75,000 new jobs were created in May, compared with an expectation of around 180,000, and previous months were downgraded by a further 75,000. Also, manufacturing output has declined and consumer confidence withering. A number of economic forecasters are predicting that the United States could see GDP growth fall to as low as 1.8% by January 2020, when the President has stated that he is expecting at least 3% per annum growth, if not higher. So many pundits were banking on a rate decrease in today's Fed or FOMC announcement later on. In fact, much of the market were initially anticipating a 20% possibility of a rise in June and in excess of 80% possibility of a rise in July. Well, that was up until yesterday, when Mario Draghi, the head of the European Central Bank, made a market-moving speech signalling the European Central Bank is ready to cut Eurozone rates and start buying bonds again, resulting in markets pricing in further stimulus. Draghi's comments triggered a jump in European markets in a reversal of earlier losses, with Europe's Stoxx 600 up 1.3% and the FTSE 100 up 1.4%, or 105 points at 7,461, though it has fallen back some 25 points since its peak. Perhaps more importantly, it triggered a fall in the value of the euro, which caused President Trump to tweet, quote, "Mario Draghi just announced more stimulus could come," which immediately dropped the euro against the dollar, making it unfairly easier for them to compete against the United States of America. They have been getting away with this for years, along with China and others. Unquote. It was clear to us from a few months ago that the Fed would delay any cut until it was absolutely certain that the economic data was clearly pointing towards recession. We were expecting today no rate cut at 2 p.m, but dovish tones by Jerome Powell at 2:30, giving the Fed breathing space until July to make a cut, if necessary, after the June data figures were available. However, Draghi's intervention now means that regardless of what Powell says, he will not appear dovish enough to the markets, and so it is quite possible he may actually reduce rates today. Now, with a 1.11 euro-dollar exchange rate and the dollar rising to the point at which £1 sterling equals $1.25, it is indeed possible that the Fed may lower rates today. We still on balance hold the opinion that they will wait until July, but whereas we were 90% certain this would be the case previously, our certainty has fallen to just 55%, so it's a balance, especially since the Fed will remember the criticism it had from its rate rise last December. What we do know, however, is that many analysts are recommending the sale of the euro and the purchasing of sterling, since the latter has taken a hammering recently over the Brexit debacle, and the Bank of England is still maintaining a hawkish interest rate policy stance, whereas Europe and the US have become much more dovish. In any case, this is all academic. We shall know more in just a few hours. Meanwhile, at the time of writing, gold stands at $1,343 and silver at $14.96 an ounce. Do you believe that the bank will lower rates today? Replies please before 2 p.m, because we'll know the answer then. We shall then produce a comprehensive review of today's announcement and Jerome Powell's comments tomorrow. We hope you have found this video interesting and informative, and if so, please give it a thumbs up and share it on social media. Please ensure that you have subscribed to our channel and press the bell sign so that you are notified of any future videos. Also, kindly visit our website at illuminatisilver.com, and if you haven't already done so, please subscribe either as a free or paying member for regular email updates and offers. Disclaimer: Illuminati Silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.